On June the 12th, 2026, SpaceX is going to attempt the biggest initial public offering in the history of financial markets. The number attached to the IPO, $1.75 trillion, is so large that it would make SpaceX more valuable than JP Morgan, Amazon, and every major bank in Europe combined. But that's the least interesting part of the story, because Elon Musk isn't doing this IPO the way Wall Street does IPOs. He's offering just 4% of the company to the public. He's reportedly skipping the lockup period that protects markets from insider selling. And he has structured this offering in a way that financial analysts are describing in the same sentence as both unprecedented and bubble territory. This is the story of how a man who was completely broke in 2008 is about to attempt the largest stock market debut in human history. To understand why June 12th is so special, you have to go back to a time when SpaceX almost died, even before it got its first rocket into space. Elon Musk founded Space Exploration Technologies, or SpaceX, on March 14, 2002 in El Segundo, California. He had just sold PayPal to eBay for $1.5 billion and walked away with roughly $180 million of it. Instead of doing what every sensible billionaire does with freshly liquid money, diversifying, funding safe startups, buying a second home with a view, he put the majority of it directly into building rockets. The first rocket SpaceX ever built was the Falcon 1. Small, lean, and theoretically capable of reaching orbit for a fraction of what NASA was paying legacy contractors like Boeing and Lockheed. It failed within the first 30 seconds of launch in March 2006. It failed again in March 2007. It failed a third time in August 2008. After that third failure, Musk was effectively out of money.
Almost went bankrupt. We closed our financing round 6 p.m. Christmas Eve 2008. It was the last hour of the last day that it was possible. We would have gone bankrupt 2 days after Christmas otherwise.
There was just enough hardware left for one more launch attempt. Just one. The fourth Falcon 1 launched on September the 28th, 2008. This time, it reached orbit. It became the first privately funded liquid-fueled rocket in history to do so. 6 weeks later, NASA awarded SpaceX a contract worth $1.6 billion. The company had survived. Barely. And the man who almost lost everything on rockets was now the most credible private space operator on the planet. That story is the foundation of everything that's going to happen on June 12th. Between 2008 and today, SpaceX has managed to restructure the entire economics of space. The Falcon 9 became the dominant orbital launch vehicle on the planet because it was the first rocket built around a single obsession: reusability. NASA, Boeing, and Arianespace had all operated on the assumption that rockets were disposable for 50 years. SpaceX treated the first stage like a commercial airline and landed it back on a drone ship floating in the ocean. The first time they stuck that landing, December 2015, it looked like science fiction. Today it happens so often it barely makes the news, but the rockets, extraordinary as they were always the infrastructure. The actual business that justifies a $2 trillion valuation is Starlink. In 2019, SpaceX began deploying satellites into low Earth orbit at a scale no company had ever attempted. By 2025, Starlink operated a constellation of over 10,000 satellites, providing broadband internet across more than 150 countries, including remote islands, rural communities, and active conflict zones where no ground-based network would ever reach. Governments, militaries, and research stations in Antarctica, all of them are Starlink subscribers. The financial result is staggering. In 2025, SpaceX posted revenues of over $18 billion, and its Starlink segment generated a profit of over $7 billion, with a 63% margin. For context, Apple runs net margins of around 27%. SpaceX is generating profit at more than twice the rate of Apple, from a business most people still think of as launching rockets. In 2026, Starlink is forecast to generate $18.7 billion, representing approximately 79% of SpaceX's total revenue. It's no longer a rocket company. At its core, it is now a global internet utility with the most defensible infrastructure above the Earth's atmosphere. Here is where the story stops being a business case and starts being something else entirely. Most major IPOs operate on conventions that markets have built over decades. A company offers 10 to 20% of its shares to the public. Existing shareholders agree to a lockup period, typically 6 months, during which they cannot sell. This window exists to prevent insiders from dumping stock the moment retail investors pile in. It's imperfect, but it functions as a basic protection mechanism. SpaceX is offering just 4 to 5% of its shares. In a company valued at $1.75 trillion, 4% represents roughly $70 billion of new stock entering the market. Everything else stays with Musk and a small circle of insiders. And the lockup period, reports suggest SpaceX may skip it entirely. Insiders could, in theory, begin selling the moment the stock lists. Wall Street is not used to this.
SpaceX IPO is said to value the company at between $1.75 and $2 trillion right from the get-go.
That's a $2 trillion valuation. And not because the underlying business justifies it, but because when supply is 4% and global demand is effectively unlimited, price discovery becomes irrational almost immediately. A major union has filed formal warnings with financial regulators about the governance structure. The core concern is straightforward. Shareholders buying at IPO price are acquiring economic exposure to SpaceX's upside with almost no ability to influence its direction. Musk retains voting control. The board answers to him. Investors are, to be precise about it, passengers on a rocket with one pilot. But we still haven't talked about the most uncomfortable question in this whole story. What exactly are you buying? You're buying Starlink. And Starlink is genuinely one of the most strategically valuable infrastructure assets ever built. 10,000 satellites, 150 countries, a customer base that includes the United States military and a dozen NATO governments. That part is clearly not speculation, but you're also buying Elon Musk. And Elon Musk is no longer a CEO in the conventional sense. He is a geopolitical actor. In 2022, Musk declined to extend Starlink's coverage to Crimea, preventing a Ukrainian military drone operation against Russia's Black Sea naval fleet. A decision made by one man that directly affected the conduct of active military operations. Since then, several NATO members quietly began developing redundant communication infrastructure, specifically to reduce their exposure to Starlink's network. And then there is Starship, the most powerful rocket ever built, still in active development. The NASA Artemis lunar lander contract, the Mars colonization program, the point-to-point Earth transport ambitions that would make long-haul aviation largely obsolete. None of these are revenue lines. They are enormous, expensive, civilization-scale bets, funded by the same Starlink profits that are making SpaceX look like the most remarkable business case of the modern era. Musk has always operated this way. He bet everything on Falcon 1 and nearly lost. He bet everything on the Model 3 ramp and nearly lost. The pattern is unmistakable. He goes all in, survives the near miss, and wins bigger than anyone thought possible. The question sitting in front of every investor on June the 12th is the same one it has always been with Elon Musk. Do you believe he can pull it off again? Let me know what you think in the comments below.